Tuesday, the 14th of January, 2020. There are days as a commentary writer you just love to put pen to paper. Okay, I guess in this day and age it's probably fingers to keyboard, but there are also days that you don't necessarily. And today is feeling a little bit like the latter. Why, you might ask? Well, a lack of real clarity around the day's moves. Usually there is an economic data release or maybe a global event which gets things going. But not today. The Asian session was dominated by a continuation of yen cross buying. We saw a break of the band of resistance I highlighted in yesterday's commentary for euro yen between 122.50 and 122.65. A high of 122.76 had me believing we were on the way to even higher levels, and probably a lot of other traders seeking the same thing. But it was not to be, and the European session saw a market caught long, dropped down to a low of 122.19. Dollar yen similarly broke higher in Asia to a high of 110.21, only to drop back to a low of 109.89 in Europe. So it's always healthy to keep in mind when you're looking for the big reasons as to why things move. Short-term positioning can often be the catalyst for no rhyme or reason. So aside from the fun and games of yen crosses, what else do we have? Well, the Swiss caught traders' attention today as Switzerland was added to the US FX manipulation watch list. US traded down to a low of 107.60, which is a level not seen since April 2017. Euro US would also move lower down to 110.04 for 111.40, although this was as much down to the cross flows from euro yen, euro Swiss, etc., as it was anything else. The US session would begin with a weaker than expected CPI number. This caused a slight drop in equity futures, which had earlier been buoyed by better than expected earnings from JPY. However, in the absence of any real negative news, stocks would rally, with the Dow Jones finally breaking the 29,000 level to be up over 130 points at its best levels of the day. Back comes dollar yen up to 110.10 and euro yen up to 122.60. Euro dollar also bounces up to 111.35, and sterling recovers much of yesterday's losses against the dollar, bouncing to 130.30. All good. And then we get a headline about a report that the US will keep Chinese tariffs in place through the 2020 elections. This was a report that was published by Bloomberg. Dollar yen did dip on the headline, but I think there was some confusion here. In December, when the deal was agreed, the US had postponed planned tariffs for December and reduced the rate on about 120 billion in Chinese products. That part of the deal isn't in jeopardy, and there were few expectations about a further immediate or near-term cut in tariff rates. Regardless, the Dow Jones cuts most of its gains, and the S&P and Nasdaq both turned mildly negative. Euro yen dips back to 122.35 and dollar yen to 109.92. Then it's announced that President Trump impeachment trial could start as early as Tuesday of next week. Not too much of a market reaction to that, but as we head into the close on Wall Street, the Dow Jones recovers to end in positive territory, up 32 points to the day, but the S&P and Nasdaq both end slightly lower. Dollar yen is back to 110, euro yen at 122.40, and euro dollar 111.25. A noisy day, but overall very little change from yesterday's close. Moving on to the technical piece. I could repost the euro yen chart from yesterday just to highlight the lack of follow through that I was kind of expecting, and the subsequent reversal after breaking that key resistance. But I will save you from that pleasure. So I just want to quickly look at an hourly Aussie dollar chart. What sticks out here is the potential head and shoulders formation with an approximate neckline of around 68.40. Excuse me. If we look here, we can see there's a shoulder here around 69.40. We've got the head here up above 70.30. Another shoulder forming here around 69.20. Remember, the shoulders don't have to be at exactly the same level. And, you could argue there's a neckline here at 68.40. So, maybe over the next couple of sessions, keep an eye on that. If we do get a good head and shoulders formation there, and we break the neckline, technical analysis tells us we should get some momentum to the downside through that 68.40 level. Not saying we will, just saying keep an eye on it. And with that, I will wish you all a good evening or good morning, wherever you are, and look forward to speaking with you tomorrow. Cheers.